Hey, welcome back traders. Let's have a quick follow-up on what's happening with our existing trades. And we have another setup coming up on the dollar yen, which is going to be another big long one. So let's start off here with the British pound Canadian dollar. This is the trade that we placed last week sometime. We managed to place it relatively early in the cycle. We saw the ascending trend lines coming here, which makes a bit of a channel that you can trade through. So we hopped in, we've moved the stop loss up, and we're kind of chasing the trade up. We did see the short pin bar, but it didn't really come off anywhere too important besides this level here on the left. At that point, that's when we moved the stop loss up. I don't see any reason to change it. If you do want to squeeze as much as you can out of it, you may want to move your stop loss up to this point, but I'm willing to take this risk, especially since it is quite likely that the market will hit this level before continuing back up. If I see that it has broken this horizontal line, then I may look at increasing my position by placing another order going through, but we'll have to sit and watch. If you're in this trade and if you're in a lot of profit, you might want to move your stop loss up. You may want to just close the trade if this is making you feel too nervous, but I'm going to be holding off on this one because I'm not happy with only 215 pips off this trade. I feel like I should be able to hit the 250 to 300 mark, and if we can see it crack this top line that we predicted a while ago, I would be ecstatic about that. We had a look at a potential Euro New Zealand dollar setup. We have seen it coming to reverse off here, but it didn't quite get low enough to the 38.2, so I'm not going to be entering a trade off that. I'm going to continue watching it to see what happens. I do, however, feel like it is going to continue being bullish, but that's mainly because we can see that the much bigger movement is bullish. But because these bearish movements are so big, I feel it's a bit risky to enter the trade now. If you put a gun to my head and told me I had to pick a direction, I would probably choose bullish at this moment, but the entry itself does not look very good. I'd like it to come down a bit lower, maybe if it could bounce off the 50 mark, and that'll give us a good entry to continue going up. But because there's still so much room for it to come down and still remain inside this channel, it just doesn't really seem worth it. So keep an eye on it. You can even use your crossover systems. We can see here that the situation we spoke about yesterday looks like it is going to be forming. This may give us a decent entry. We were talking about how we want the market to first come down, which it has, and then start turning up and give us another crossover for a potential entry. This would line up very nicely as our 100 moving average is tending up. The market is above the 100. Stochastic will hopefully not be in the overbought position yet, and we will have a crossover. And this strategy here is confirming a bullish movement. We do still have a few days left in this week, so we don't need to jump in just yet. Now, let's have a look at the US dollar Japanese yen. We're looking at this on the daily time frame, which is something I don't often trade off too much, but it is very nice to get a view of the bigger picture. What we can see is that the dollar yen has been trading within a range for quite some time. All the way back in, what is this, late March of this year, it's kind of stayed within this price level. And we've seen some nice movements, comes down, hits up, comes down again. And that's what we're looking at now. Because we have a lot of space in either direction, meaning if this does actually bounce off this fib level and go up, we can still have a potential 260 pips around there for it to remain within the channel, and if it continues down, then we still have over 400 pips, so that's enough room to play with. It's not amazing in the bullish position, but that is definitely enough room to play with and walk off with the 75, 150 pip trade. If it does continue down up to this 450, we could reasonably expect 250 to 300 pips out of that. So let's look at what we're hoping to get from this. This level that I've marked off here, 111.50, this is one of those psychological points. It's one of those 50-cent points. So like 111.5, 112, 112.5, all of those sort of 0.5 and 0.0 levels are these kind of psychological barriers that often traders try and trade against. So we could see some nice movement happening there. And nicely, this is about halfway between the 2 points. It's a little closer to the upper side, but there is still a lot of room from there to there. That's nearly 300 pips, and on the way down, it's still over 400 pips. So either direction that it bounces off, if it breaks through or if it bounces and goes up, we could have a potential entry. And it is reasonably close to this fib level, which was drawn from this low and using this high as the other value. So what I'm waiting for in this is to get some kind of candle information on either the daily or even the 4-hour chart, confirming a reversal off this line or off this 50-cent level around here. Because the bigger picture is showing it is mostly sideways, we don't know exactly which direction it's going to trade. In fact, we are assuming that the market is going to remain within this because we don't really see any massive reason for it to break out just yet. But because it's halfway in the middle, we can make a fair amount of money either way. Now, recent trends are showing that while we do have these smaller reversals inside this trend line, we still have the bigger movement going away until it hits, and then it reverses all the way up. And yes, like here, we have a small bearish movement followed by a bigger bullish. And it's been doing this for some time now, for about a month. If it continues to do this, then the absolute ideal situation, and what I would love to see, and I would personally enter a reasonably large trade on this, is I want to see this break the 38.2 line and come down. And I'd like to see it bounce up and then give me candle information on the 38.2 or even the 111.5 to continue a short position all the way down here. Now, we would likely enter somewhere between these two lines, so we could be lining ourselves up for a 400 pip trade, which would be absolutely fantastic. That would be ideal, and unfortunately we would have to wait quite a bit of time for that to happen. But keep your eyes peeled in these trades. We have the potential dollar-yen coming up, the pound Canadian. We're just kind of managing at the moment to see how much more money we can get out of it. And now we want to have a look at and see how have we actually been trading. Now, my demo account is set to expire quite soon. I also would like to open up a fresh one so that we can start off with some new trades. But what I'm going to do is show you how to look at your account history easily. What you can do is select account history, and if you scroll through, you can see all of your trades. But now this isn't very useful if you're trying to analyze and make the decision like how well have you actually been doing. Yes, the profit looks nice, but you want more information, especially if you've managed to enter a lot more trades in this. You know, if you had like 50 trades or 100 trades or something like that. So what you can do is anywhere on your account history, you can right click and then select Save as Detailed Report. It will then give you a pop-up asking you where you would like to save it, and you can go ahead and just click save or put it on your desktop, which is where I usually keep mine. Now I already have a copy, so mine's going to replace. Once you've clicked that, it'll automatically load up your browser. Mine's on the other monitor. I'll pull it through. Now it's automatically loaded that statement that you've just saved, and it's giving you all of the information and breakdown here. Now why this is better than just looking at it inside MetaTrader is the bottom section. This is where you want to look. The important things, and it's a blend of two things, because you know a high success rate means nothing if your losing trades are significantly larger than your winning trades. Likewise, having massive winning trades and tiny losing trades is pointless if you have an incredibly low success rate. And it depends what sort of trader you are. I know some guys who have a below 50% success rate, but are still showing a lot of money because their losses are very small, but their profits are very big. I don't like to teach that sort of trading because I find it's very rare for traders to actually do well in it, but I'm just using it as an example to show you that the important thing at the end of the day is, are you making money? So what you want to look at is you want to see your average profit trade, and you look at the amount there, and your average loss trade. Now you want your average profit trade to be at least the same as your loss trade, on condition you have a higher success rate. In this case, my total profitable trades, okay, we've only placed 4 trades that have closed, is 80%. So I've won 4 out of 5 trades. When I close my final trade, that'll be 5 out of 6, so this will go a bit higher. And that is a very high profit, but honestly, you can't really take that seriously because we've only entered a couple trades. After 30, 40 trades, then this figure will become more realistic. But still, 80%, we take that into account, and then we look at, alright, so 80% of them are winning, and the average trade is about the same as the average loss trade. So this would be considered good. this would be, you know, you're making money, you're doing fine, you're calling the right trades. If you come across a situation where you're looking at another trader, or if you're looking at your own history and you see that they have a high success rate, let's say 90%, 95%, then the first thing you need to do is look at the average profitable trade and compare it to the average loss trade. You get a lot of guys out there who trade without stop losses. They will just wait because they say that the market will have to turn, it will have to reverse, and you will eventually hit profit and then close. Now this is incredibly risky because the market doesn't have to do anything. It can do whatever the hell it wants. It might never come back to the price that you're sitting at. Anything could happen, and yes, the chances are very low. This is why they can show these 95, 99% success rates. But every now and then it doesn't, and that's where their 1% failure comes, and that 1% will wipe out your account completely. So you need to make sure that your average trades are at least at about the same as the losses. That way, even if you're only showing 60% of your trades are profitable, you're still making money. I thought I'd just show you this before I open up the new account so that everything will be fresh. I'll continue trading this account until the end of the week. Although because I'm only focusing on the long-term trades, we'll probably only have another one, maybe 2 trades that we can close. But you know, check this on yours, especially after you've been trading it for 20 days or something. If you have quite a few trades, make sure that your average trades are looking good, and then obviously you want to see that your balance has gone up. The occasional down is fine. I think that was my silly trade. Yeah, here we go. That was that Canadian Swiss that I should not have entered, but we did anyway. And then I cancelled the buy stop because things were going awry. So we limited the amount of loss that we could have made off that one.